Good morning, friends. Today is November 7th. It's about 7:30 in the morning, and today is, well, we got two impactful days back to back. Yesterday we had post-election day. Today we have the FOMC, or the Federal Reserve, interest rate decision day. Plus, following that, their presser with Jerome Powell will expound on their narrative and take a Q&A from the press. So it's a very impactful day. This is highly anticipated. That should increase the implied volatility for the day, making it a particularly good day to trade our strategy, the zero DTE strategy, because when implied volatility has expanded, that gives us a situation where gamma risks are lower, profit potential is higher. So all good. That means that we can rush into the market with greater confidence. So what I want to do first of all is go to the Fed Watch Tool page so that we can take a look at that. So I thought I had this set up, but I guess not. That's okay. There it is. All right, let's go there. There we go. All right. So this is the Fed Watch tool. You can get that at the cmegroup.com. And it is an algorithm that looks at bond traders, essentially, and the market and makes a prediction on what the Fed is going to do. It's really accurate, so you got to pay attention to this. You see that the current rate is somewhere between 4 3/4 points, or 475 basis points to 500 basis points, essentially 4.75 to 5. And the odds here are on where they think it's going to go. And you can see that there's a 97% chance that we're going to cut rates by 25 basis points. There's a 2.6% chance that we're going to cut it 50 basis points. So that's for today. After today, we have I believe we have one more rate cut coming up. Let's see, where are the dates here? Right here. So on December 18th, there is also a rate cut, and these are the current odds for that. All right. All right, so let's get back to the big head. So we get rate cuts out of the way. That'll come around 2 o'clock this afternoon Eastern time. Very highly anticipated. But for the entire day, that should impact us and the type of trades that we make. Oftentimes during Fed days, we have two opportunities. We have the initial opportunity during the day where we take our morning session trade and then look for some level of volatility crush by late morning. And then volatility will rise again as we go into the Fed rate cut meeting. And then there's another opportunity to take another trade. So that's what I'm really looking for. But overall, let's take a look at our trading day and see how that's going to pan out. So we'll go to Trading View. All right, so here's Trading View. We have to get our bearing straight, understand where the big picture VIX is, then look at the market direction. Big picture VIX, pretty much the same story as yesterday. It is in the zombie land zone, very low volatility, so that implies that we should be looking for butterfly widths between 10 and 20 wide. This is all based on the SPX or the E-mini S&P futures. So we're looking for 10 to 20. The next step is to look at the our specialized tool that we call the big ass fly. Hold on, let me get to that. Preview, there it is. All right, so the big ass fly is nothing more than a at the money E-mini S&P futures butterfly that is 50 wide, and what we're looking for is the debit on that 50 wide trade, because what that will tell us, typically that debit will be very, very sensitive to implied volatility for the day or the expected move. And I've been looking at this for decades, have thousands and thousands of instances and trades looking at this, so I have a very empirical view on what that range should be. So it ranges anywhere. I've seen it as low as 5 and as high as 35. When it's very low, that implies that volatility is very high for the day. And so we can take much wider flies. When it's very high, that means volatility is extremely low for the day, and that the gamma risk is going to be high, profit potential is going to be low, so we tend to contract our exposure to that risk. So let's take a look at where we are right now. It looks like we're right around 20, which is Midland, I'd say, right in the middle. So we'll use that to go and look at our TradingView chart to see exactly where we should be. And you can see up top here is my guide for that big ass fly. We also call it the poor man's straddle. In any event, because we're looking at 10 to 20 wide, as we did from the big picture VIX, we can then look at where we should be on that scale for today. And because 20 is right in the middle, it looks like we should be looking at 15 wide flies today. So an out of the money butterfly, that's 15 wide. Of course, we're shooting for about a 10% debit to the size of the width. So a 15 wide fly would imply about $1.50 debit for the butterfly. And now let's take a look at the direction of the market. Well, we've had two very, very strong days, one pre-election and one post-election, and we're obviously well above the moving average here. So I would say then that the trend is up for sure. All right. And we can confirm that by looking at the current market. Here's the current market. And we can see that here's yesterday's close, this purple dotted line, and we're just a little bit above that, poised to go higher. Now, these two vertical lines are they're marking off the period of the day that we would normally take our trades, and that's in the morning session. From 9:30 to 12:30 is what we define as the morning session. And then these horizontal lines and these little landing pad areas are structural elements that we have determined from the volume profile, where if we're going to take a trade, we're looking for a pullback on a bullish day, pullback to one of those landing areas or structural elements, and then that will give us our entry setup. And so that's the entry event that we're looking for, a pullback. And just like yesterday, that exact same thing happened yesterday, and it was a very successful trade. We were also bullish that day. It pulled back to this structural level and went up. So what happened was when it came down there, that was our signal to get into an out-of-the-money fly. So we put an out-of-the-money fly up top here, and that turned out to be remarkably successful, and most members made a lot of money. So we're looking for something very similar to happen today. So wherever it decides that it's going to pull back to, that's where we'll decide to take a bullish, out-of-the-money butterfly, 15 wide, shooting for around $1.50. It can be as low as $1.25, maybe as high as $2, but right in that range, so it's an asymmetric trade. And all right, so now we have the setup, the morning analysis. Really, everything's good to go. The only thing that we really haven't looked at is what could possibly be happening in the, let's take a look at that. What could be possibly happening in the economic report realm? Let's take a look at that right here. We'll look at Forex Factory, see what's going on today. So today's Thursday. We have unemployment claims. We have the federal funds rate, of course, and the FOMC statement. So those are the big three in the press conference. That's the big three. And, of course, we have unemployment. So it's going to be very interesting to see how unemployment shakes up, considering that the employment news has been absolutely dismal. And all the revisions, every time the government revises, or the Bureau of Labor Statistics revises their unemployment or employment numbers, it's always revised down and to the detriment of this nation. It's been that way for the past 2 years. It's really been a farce. They've been putting out what I would consider very optimistic numbers for public consumption, and then on the next meeting, then they revise it down. Then they revise the quarterly or the entire year down by almost 800,000 jobs. So in other words, they're lying. And then they have to come to grips with the truth and then do it under the covers, behind the scenes, where it's not generally reported. I'm sorry, but that's really the reality that we've been faced with these past few years. So anyways, that should the unemployment claim should bring in a fair amount of energy, but I think it's going to be totally trumped, no pun intended, by the Fed fund rate meeting and their statement and the press conference, which will happen later today at 2 p.m. All right, so there's a full-throated analysis for the morning. Good luck in your trading, and we'll see you tomorrow.